And to further unpack these market moves is Anthea Gardner from Cartesian Capital. Thank you so much for your time, Anthea. It's always a pleasure.
Hi, Zanati.
All right, it is a quiet one on the local bourse today, Anthea, but we are seeing green screens coming out of the local market. That's always welcomed. A bit choppy, though, in Europe.
Yeah, which is surprising, this Europe thing, actually, because last night one of the ECB, in fact, the Bank of France governor came out and said that they are likely to cut interest rates in June. And you would have thought that's positive for equities markets. So a bit strange. Good for our market, it seems, though. Our equities bouncing nicely. Even our bonds are being bought back. Yields are down about 6 basis points across the board. And even the spread to the UST has narrowed by about 5 basis points. Nice, strong rand, which is a real pleasure, I guess, for us. Powell's comments, I think, really drove, this. He's interpreted it as, or he's being interpreted, I should say, as higher for longer, but no rate hike. So we'll see how that works out for us. There's a lot of talk about, we potentially spoke about 3 rate cuts for South Africa this year. We're already in the middle of May. It's unlikely we're going to get 3. But what's a bit worrying is that there's a lot of talk about maybe even a rate hike in South Africa. Inflation just is not coming down the way we were hoping it would.
Then I must ask you, Anthea, I have seen some commentators alluding to the fact that the issue of the NHI signing could have an adverse effect on the rand. Are those two likely to, draw links?
I think South Africans are very navel-gazing, right? And everything is a drama. And we're at the stage where we just don't trust government. So an NHI for South Africa would be a fantastic thing. But I think the analysts and the offshore investors look at it and think that's not going to happen for another 2 decades at least. You've got people like Adrian Gore and those kind of people, I should say, or analysts saying that NHI is not going to come into effect immediately, and so it'll have no negative impact. And you've got lots of people fighting this bill. I mean, I heard John Steenhuisen yesterday saying that they're taking government to court about it. You'd think you'd have better things to do, quite frankly. But so implementation, and even though it's such an emotive topic for us, I don't know if it's moving the market, or if it's market moving, I should say, at this stage.
Very interesting indeed. Let's get into some... Yes. Please continue.
Sorry, I was going to say, probably the biggest thing is this lack of load shedding, which has had a really positive effect on our market generally. So if you look at the all-share index, you'll see that it's had such a nice rebound since there's been no load shedding. And local equity is still looking very cheap. And no load shedding, a positive catalyst for a rebound. Admittedly, I don't think we should be buying across the board. Not all companies were created equal, but there are some good opportunities in the equities, local equity market.
I'm also keen to get into some company news with you here. I want to look at Nepi Rockcastle. They have actually reported a very strong set of numbers here. I see their operating income lifting by 12.7%. Anthea, what do you make of this performance? I know they're a nice, well diversified rather.
Indeed, and also a lot of offshore exposure. So growth in net operating income really good, as you said, almost 13%, and like-for-like basis, 9.4%. This is really from higher base rents, tenant turnover, tight management of operating costs. And in fact, the growth is currently being driven by tenant performance, which is interesting to note, because you'd think that in a consumer environment, it's difficult for the spend to increase. And what Nepi Rockcastle have said is that even though footfall was up only 2.1%. Tenant sales are up 10.5%. Your average basket up 8.8%. So really, the consumers are still spending and really helping Nepi Rockcastle as the landlord.
Also keen to get your thoughts on ENX. Also, I think a reasonable performance, just considering the macros here. The logistics business as seemingly the star of the show.
So revenue from continuing operations increased by 5%, which seems measly, but I think it's decent, in this economic environment. especially driven by increased volumes in their specialty chemicals, component products, generator sales. You can see where this is going, right? They returned cash to shareholders through a special distribution of R1 per share in November last year. The concern, I guess, here would be the net debt to equity, which increased to 57% because of the use of debt in financing growth in the Equestra leasing book, and NAV slightly down. So kind of a almost double-edged sword, this company.
So investors really liking it today, up more than 4%, Anthea. I also want to speak to you about a matter that I think I've been speaking about all week because I can't get over that. Every day there's been something new. Anglo's, BHP, all of it. It is quite, the story here. It looks like Anglo's has restructured, or is looking to restructure its portfolio. But Anthea, I'm wondering if, from your perspective, is this Anglo's telling BHP to go away?
If you look at it, it actually looks like Anglo saying, I'm going to slim down my operations and become an easier target to buy. So, I don't know if it's really Anglo sending BHP away. It feels like both CEOs want the same thing for Anglo, and Anglo restructuring, selling off some of the component parts, which BHP didn't want anyway. So you'd think that a smaller company would be easier to acquire, especially if it holds the key assets that the acquirer wants. I think what you'll see when all of this kind of starts to happen, if they can get it through urgently or quickly, which I think shareholders will want, is you'll see other bidders coming into play for Anglo. It's such an interesting one to watch at the moment.
We'll be watching it very closely, and I'm keen to get your stock pick in a bit. But first, I'd like us to reflect on counters that have found favour with your industry peers.
So I'm going with Afrimat. Last year's numbers, about 70% of their earnings derived from the iron ore operations, and I think what you find here is that as commodities are bottoming and recovering, Afrimat's being overlooked as a good access point into the sort of broader commodity play. Yes, they've got a lot of iron ore exposure, but they also have phosphates and a number of other things. So they'll benefit as mining activity picks up, as commodities pick up, which I think we're seeing the start of as the numbers out of China are starting to improve sequentially in the last few months. And so you add to that, plus, if you look at Raubex, you are seeing a pickup in the infrastructure and construction activity, something that they'll also potentially benefit from, plus the optionality in Lafarge, the cement business that they bought. So I think I like it. I think there's an opportunity there, and that's my pick of the day.
I'm picking Process. So the one result we didn't speak about today, which came out today, is Tencent. A strong quarterly result from Tencent. Obviously, that's good for Naspers and Process. And if you look at the last year, Naspers has outperformed Process. Mostly the first 6 months of the last year, not the last 6 months. The performance has been very similar. But there's a few things I like about Process slightly more. The one is this gap between the Process and the Naspers movement in the share prices. There's going to be potentially a scrapping of the tax in the Netherlands for the buying back of shares of companies in the Netherlands. That'd be good for Process. And then there was another announcement today of Delivery Hero selling their Taiwan food delivery business to Uber Eats. And that really fixes the Delivery Hero balance sheet. And Delivery Hero's stock price was up over 20% on the day. And Process has got a significant stake, roughly a third of Delivery Hero, plus a bunch of other food delivery businesses and some other e-commerce businesses. Plus you have the share buyback continuing, accreting some value on a per share basis. And it's trading at a significant discount to the sum of the parts. So what's not to like?
Hanging my hat on Apple. So China sales in the second quarter have looked a lot better than the first quarter sales. Despite recent negative sentiment around Apple's prospects in China, there are still 220 million iPhones in China, of which 130 million haven't yet upgraded in the last 4 years. We are also in an environment where there's a great uncertainty around when the rate cutting cycle will start. And mega tech companies like Apple are sitting on billions of dollars in cash and don't really rely that much on debt. Hence, they have the ability to act as defensive stocks in such an environment. And Apple has recently pulled back, and I think it's got some space to run.
All right, and they're keen to get your thoughts on some of those, Afrimat, Process, and Apple.
So on Afrimat, the one thing that wasn't mentioned, and I suppose it's difficult to, but we really like Andries van Heerden, the CEO. You know, he's a founder. He's got a great style about him. He knows the company inside out and knows which deals to work. I'm not as convinced about the commodity cycle and where we are in the commodity cycle, or even on the boom in South African construction. It doesn't feel as convincing to me, perhaps. And then on process, you know, I can't disagree with JP, because if you've seen the Alibaba and Tencent results, Alibaba reporting a 10% jump in net profit, Tencent 62% jump in net profit. I mean, these numbers are crazy. I've always been, not always, this year, when everybody else was turning against China, I've always been a China bull. And then, of course, Carl works for me. He's my analyst. And though we encourage discussion in our team, he definitely has the right idea about where to go when you're thinking about picking stocks.
And with that said, which counter are you loving this afternoon?
Look, with this strong rand, I definitely want to send some money offshore. And if you don't already own Eli Lilly, I know it seems a bit cliched, but sometimes cliche for a reason. I recommend you go and buy some Eli Lilly. I don't think the weight loss craze is nearly done. In fact, I think it's moving out of Hollywood and into the middle classes across the world. But not only do they do this Mounjaro and the Zepbound, which are really competitors for Wegovy and Ozempic, but I also like, or I'm expecting some earnings growth from their leukemia, their Alzheimer's, and the sleep apnea drug tirzepatide. I must get that right. So these drugs take a long time and a lot of spend on R&D to develop, which creates a nice solid moat for the company. I've seen research on Eli Lilly calling the target price over $1,000. You know, it's trading at about 760 at the moment. So I'll take that 30% upside.
Wonderful. It's always a pleasure speaking to you today, Anthea. Thank you so much for your time. That was your Midday Markets Update with Cartesian Capital's Anthea Gardner.